Hi guys, in this video we will be discussing about the third set of principles, that is the modifying principles. Moving on. The basic principles provide guidelines for maintenance of accounts and preparation of financial statements in a reliable manner. In order to ensure practicality in financial statement, we should accept certain principles which are modifications of basic principles or conventions. Here, modifying principles do not change the basic principles, but to make it more easier or more practical, there are some changes or modifications done to the basic principles in order to maintain a reliable and practical financial statements so that people will find it easier to interpret them. Materiality. According to the principle, importance should be given to the material facts, ignoring the insignificant details. Example, if a debtor's statement is to be sent to the debtor, the detail of the paise should be recorded, whereas when the statement is sent to the top management, the figures may be rounded up. That is, when the accounts is maintained, the insignificant part, like each and every paise, each and every small details might not be useful. So ignore the insignificant or unimportant part and just concentrate on the core or the important facts. The example which is given here is when you send the debtor statement to the debtors, each and every paise is significant for them because they have to, when you send the statement, for them it is significant because they have to pay it to you. But when the same is sent to the management, they just need to know how much, like a rounded off figure, you will get just 1,000 rupees. That's enough for the top level management. But when it is sent to the debtors, for them it should be 999 because that's the only amount they have to pay to you. For them, that 1 rupee counts. Consistency. The accounting practices should remain the same from one year to another. Example, if the closing stock is valued at cost price or market price, whichever is lower, the same should be followed year after year. This is important to make comparisons because comparison is important for the management to make further decisions. According to this principle, the method followed by the accountant should be the same in all the years. That is, it should not change from one year to the other year. For example, if the closing stock is valued at the cost or the market price, whichever is lower, it should be the same method of valuation for the closing stock every year. This year, this method will be followed. Then next year, you won't be following the other method where the market price is taken. No, the same method should be followed all the years so that it will be easier to do a comparison. So, like this year, this happened, and the next year, it has increased. It is only if the method is the same you can compare things. If you follow different methods, you can't compare things. And comparison is important because for the management, it is for them, they have to take decisions on this comparison. Reference Accountancy 1 by P.K. Lazar.